Hi everyone, and welcome to our unit on taxes and tax planning. In our budgeting chapter, we learned that the average American pays about 25% for 4 taxes that have to do with their income or their wages. They pay payroll tax with Social Security and Medicare. Those two together are 7.65%. They pay income taxes, hopefully in my world of 14% on an effective tax bracket or less. And we pay pretty much 4.35% to the state of Michigan. Added up as we enter this chapter or unit, please consider that that's about 25%. Now, for the U.S. tax code, it is based on the idea that everyone should help finance the government or our society based on an ability to pay. Changes in how the word everyone is defined and how the phrase ability to pay is measured have led to several conversations and debates on the congressional tax floor. It's what keeps our system ever evolving. We're going to cover 3 quick learning objectives, and that's at what level does the government impose tax? What different kinds of taxes on assets, incomes, or transactions are taxed? And then we're going to compare and contrast, real quickly, progressive and regressive taxes. Progressive taxes are a system where the more you make, the more they take. So let's look at 6 taxes just from a very top level. Income, sales, value-added, excise, property, and estate taxes. We won't cover value-added or excise taxes in this class. We certainly cover income, sales, and at the end, estate taxes. Please look at all the categories on the screen and realize that an income tax is based in the U.S. The more you make, the more they take. That's progressive. That's the opposite of a sales or consumption tax, where low-wage earners still pay in Michigan 6%, so they're actually paying a disproportionate amount of their income, which is why they consider it a regressive tax. We have some additional learning objectives for relevant tax planning, schedules that you need to know on your tax return, how to do deductions, exemptions, and look for credits, and then we'll compare the methods of how we tax ourselves. In this unit, we're only going to cover individuals, while there are 4 purposes in a tax process, and that's corporate, nonprofit, trust as entities as well as the individual. Within the individual area, you can be single, married, married filing separate, or a head of household, which is a very unique tax bracket that allows a single wage earner, like a single parent, who's taking care of either a parent or a dependent child, to have a higher tax deduction to make sure that they have housing, clothing, and food. What I consider the basics of what taxes should provide. Now, when we look at gross income, there are some adjustments on the first page of the tax return that we'll learn about in our lesson that are very important. An example, as a teacher, every year I get $250 for a page 1 tax deduction because I provide supplies in classroom for the greater good. A normal employee doesn't get a page 1 deduction for taking supplies to their office. After we get to the page 1 of the tax return, at the bottom it becomes the adjusted gross income, or AGI. Then we'll learn in our tax lesson that we have deductions, which are standard or itemized, and exemptions, which are how many humans we take care of in the house. And that leads to the taxable income. We'll be going over this chart with regard to a highlighted tax return, and I'd like to have us stop there now. Please look at the schedule in the brackets in front of you, and then we'll transfer to the actual tax return. Thanks for your time.